In this short video today, I'll show you how to implement the average true range, ATR, for trading setups in the market. The average true range, ATR, is an indicator that measures market volatility and was developed by J. Wells Wilder. This indicator is used by traders to measure the relative magnitudes of market pricing fluctuations. As a volatility indicator, it shows how much price fluctuates, on average, during a given time frame. Average true range, ATR, can be interpreted in the following way. The higher the value of the indicator, the higher the probability of a trend change. The lower the indicator's value, the weaker the trend's movement is. Take note, the ATR indicator is not a trending indicator. Traders often mistakenly believe that volatility equals bullishness or bearishness. This is absolutely wrong. Volatility does not say anything about the trend strength or the trend direction, but it tells us how much price fluctuates. Professional traders tend to use this indicator to measure market volatility, and then rely on other technical indicators to help identify the direction of the market. Here are the indicator parameter settings. By default, the length is 14. The 14 length means that the indicator will measure the volatility of a price based on the 14 most recent periods of time. Modifying the ATR indicator to different time periods would affect the sensitivity of the indicator. Using a lower setting gives the ATR indicator a smaller number of values to track. This makes it much more sensitive to recent price action and will give a faster reading. Since the indicator does not provide an indication of price trend, to use this indicator to generate trade signals, you have to look out for each higher and lower value set by this indicator. Then you relate this higher and lower value to the lows and highs on the price chart. How can we use the ATR indicator to generate a buy signal? You have to see a higher value on the indicator, as we can see here. Then relate it to the price chart. If price charts make the opposite direction of the indicator, as we can see on the price chart here, price made a low swing here. The opposite move occurred on the ATR indicator. We can see the higher move on ATR. This suggests a higher probability of a trend move to the upside. How can we use the ATR indicator to generate a sell signal? To use this indicator to generate a sell signal, we need to see a lower value on the indicator and a higher price move on the price chart, as we can see on the price chart here. Price made a high swing here in the opposite of the lower move on ATR. This opposite move between the ATR and price chart suggests the higher probability of a trend move to the downside. We can see how this trend was reversed downward aggressively. How can we use the ATR indicator for taking profit? Taking profit and stop loss with the ATR indicator depends on the direction of anticipation in the market. If you have a long or buying position in the market and you're in a profitable trade, it is best to close your trade when the ATR indicator reaches the low of the indicator reading scale value zones here. Likewise, when you have a short or selling position in the market and you're in a profitable trade, it is best to close your trade when the ATR indicator reaches the high of the indicator reading scale value zones here. How can we use the ATR indicator for stop loss setup? To use the ATR indicator for a stop loss in a buy position entry, we need to multiply the value of the indicator reading scale by 2, and then subtract it from the current entry level on the price chart. As we can see, the indicator reading scale here is 0.00444. Multiplying 0.00444 by 2 would give us 0.00888. As we can see, the price chart level of this swing low is 1.37834. Next is to subtract 0.00888 from 1.37834. The result is 1.36946. Therefore, our stop loss on this trade setup would be here. The same goes for when selling. You multiply the reading scale of the ATR by 2. But this time, you'll have to add it to the sell entry price level to know your stop loss level. The ATR is an effective trading indicator to detect early trade setup formation. To increase your winning probability with the ATR trading indicator, avoid the execution of trade setups whenever the ATR indicator is trading at the midpoint of the reading scale value.